There are basically three ways in which an employer can compensate an employee for travelling for business purposes in their own vehicle. The one is a company car, which is a company-owned vehicle, but the second is a travel allowance, and the third is a travel reimbursement. Just to deal briefly with the travel allowance, this is an estimate made by the employer of a fixed amount per month, which is paid to the employee to compensate them for using their own vehicle for business purposes. Now, the tax rules around that are complex, but not of importance for here, because the last aspect is the travel reimbursement. And a travel reimbursement is a travel reimbursement when it's calculated as the number of kilometers times a rate per kilometer. Then it's a travel reimbursement. So being based on business kilometers, it says it all. It's a reimbursement, it's a business expense, and the employee should not be taxed on it. Now, the situation has been unclear for years, but changes have been made from March this year, which says that if the rate per kilometer used to calculate the reimbursement is above what's called the prescribed rate, currently R3.55, then the portion of the reimbursement calculated at the higher rate, the excess portion, is remuneration, which means it's used for pay-as-you-earn, skills, UIF, and so on. And it will go to assessment, and the employee must provide a logbook to prove his business travel, and the final calculation will be sorted out on assessment. The issue is that that portion of what is a business expense is taxed in the employee's hands, which is not correct. A reimbursement is basically not the employee's problem as far as tax is concerned. So while the method of apportioning the travel reimbursement into a non-taxable portion and a portion that's remuneration is far better than what it was. This is a welcome change from March. We would have liked it to have gone further and to say that there is no portion that is remuneration, in other words, subject to tax in the payroll. But if it is above prescribed thresholds, which SARS are quite entitled to do, then it must go to assessment, and then the final calculation must be done on assessment for income tax purposes. So this is what we'd have liked to have seen. Step one was a good step. We'd like to see step two being taken in the future. And just to lastly say that the method that subsistence allowances are taxed is exactly what we're proposing. There is a daily limit. If you're above the limit, it goes to assessment, but it's not taxed in the payroll. So we're hoping for that in the future.